Hello everyone, welcome to my Options Trading Academy, and in this module we're going to discuss Fibonacci retracement levels. So what will we cover in this module? Well, we're going to answer who was Fibonacci, what are Fibonacci numbers, what are Fibonacci retracement levels, how can we use Fibonacci levels in stock or options trading, how do we draw Fibonacci retracement levels, and we will have a quick summary at the end. So let's begin. So who was Fibonacci? Fibonacci, who was also known as Leonardo Bonacci, or Leonardo of Pisa, or Leonardo Bigola Pisano, was an Italian mathematician from the Republic of Pisa. He was considered to be the most talented Western mathematician of the Middle Ages. He introduced the concept of Fibonacci numbers and the Fibonacci sequence. So what are Fibonacci numbers? Fibonacci numbers appear often in mathematics, and there's an entire journal dedicated to their study, the Fibonacci Quarterly. Fibonacci numbers also appear in biology, such as in branching in trees, the arrangement of leaves on a stem, the fruit sprouts of a pineapple, and much more. Fibonacci numbers are a sequence of numbers where each number is the sum of the previous two numbers. For example, in this sequence shown here, 1 plus 2 equals 3, 2 plus 3 equals 5, 3 plus 5 equals 8, and so on. Fibonacci numbers are also related to the golden ratio, where the ratio of two numbers is the same as the ratio of their sum to the larger of the two quantities. So in nature, Fibonacci numbers and the golden ratio are seen in many places, such as the shape of galaxies, the shape of shells or sunflowers, and much more. What are Fibonacci retracement levels? Fibonacci retracement levels are horizontal lines on stock charts that indicate key support and resistance levels based on Fibonacci numbers. These levels correspond to how much the stock price has retraced. Each level is associated with a percentage, typically 23.6%, 38.2%, 61.8%, and 78.6%. Usually 50% is also included, although it is not a Fibonacci number. The Fibonacci indicator is typically drawn between two significant price points, a high and a low. The charting software will then automatically create the Fibonacci levels between those two price points based on the percentages of that difference. For example, if a stock price rose from $10 to $20 and we use Fibonacci retracements as our indicator, the 23.6% level will be drawn at a value of $17.64. We achieve this number by taking $20 and subtracting from it 23.6% of $10. So that would be $10 times 0.236, and if we subtract that from 20, we are left with $17.64. So Fibonacci retracement levels are simply percentages of whatever price range is chosen. In this example, I have a stock chart of AMD, and we can see Fibonacci levels have been drawn based on a high stock value at this point and a low stock value at this point. So then the charting software will automatically calculate the 23.6, the 38.2, the 50, the 61.8, and the 78.6% Fibonacci retracement levels. As you can see, when we select our high and low values for the price, we are selecting the 100% and the 0% Fibonacci levels. Now, if we would like to see how future price movement may be impacted by these levels, we can further extend these horizontal levels out, such as in this example. Looking at this chart now, we can see how often AMD has bounced off these Fibonacci retracement levels. For example, at this point, the stock price seems to bounce off the 23.6% Fibonacci retracement. Here again, we bounce off the 50% level. And here, we are almost bouncing off the 61.8% level, and currently it looks like we are very close to bouncing off the 78.6% level here. Let me show you in real time how we can calculate Fibonacci retracement levels. The charting software that I like to use, and you probably have already seen in my prior videos, is tradingview.com. So if you go to tradingview.com, you will land on this homepage, and you can simply launch this chart, and you'll be taken to a page that looks similar to this. Let's take a look at Apple stock. To make things easy, I will change this from a candlestick chart to a line chart. And we can see by a quick glance, we have a high point in Apple at roughly $327.48 and a low point in Apple at about $224.59. So if you would like to draw Fibonacci retracement levels, you can drag your cursor to the side and click on this icon here. Click on Fib Retracement, which also has a shortcut of Alt F4. So once we do that, we now have to select our high and our low values. So we're going to select this value here with a left click. We're going to drag the mouse down to this level. Now, because I want to extend these horizontal levels out to see future price action, I'm simply going to draw my mouse horizontally while keeping the bottom or the 0% Fibonacci level at the lower strike price, and simply let go of the mouse. So now we have drawn the Fibonacci retracement levels for Apple stock, and as you can see, the stock is currently trading between the 78.6% and the 100% Fibonacci levels. Also, taking a quick look at the stock, we can see it bounced off the 23.6% level here. Looks like it tried to break below the 50% level here, but ended up bouncing back up off it. Again, bounced off the 61.8% Fibonacci level here, and came rather close to bouncing off the 78.6% Fibonacci level here. So how can we use Fibonacci retracement levels in our trading? Well, we can use them to place entry orders, stop loss orders, or set price targets when buying or selling stocks. We can also use them to set strike prices for stock options. For example, looking back at our example on Apple stock, seeing that the stock is currently trading at $318.89, if I was interested in selling a cash secured put on Apple, I would likely want to sell a put at a strike value less than $305 because that would be below this current support level at the 78.6% Fibonacci level. So in summary, Fibonacci retracements connect high and low price points to show key support and resistance levels where prices could hold or reverse. The most commonly used retracement levels are 23.6%, 38.2%, 50%, 61.8%, and 78.6%. Like with all technical analysis, these levels should not be relied on exclusively. And as always, happy trading!